And the Talk Shop Afternoon Edition with Dan Pasman, UNIONHOME Mortgage, downtown Laramie, 208 Grand Avenue in historic downtown Laramie. Dan Pasman, what did you bring to us today? Today's Credit Tip Tuesday.
Yeah, we've talked about a lot. Last time we got in a little bit of the home buying process and kind of some different programs and what's all involved with that. I thought today we'd kind of venture down kind of what does that process look like, and because especially with everything that's been going on in the world, there's been a lot of topsy-turvy things that have happened. So, one thing we talked about a lot about last time was VA loans and how that works, and there's no mortgage insurance in exchange for an upfront funding fee. The other thing with that is if you're a disabled veteran, you can get 100% financing on a house and no funding fee that goes with that. So you basically get it without mortgage insurance, which is a really good thing. Now, like I said, after you go with the credit fixed, ready to take the next step, they can look at something. Now, the next fixed credit can look like many different things. Some folks it's buy the new car, or some people do things like that. But my specialty is homes, so I'm going to kind of venture about homes and talk about that.
Encourage and engage.
That's right. So when you make an appointment to see a mortgage professional, what you'll want to take with you is most current pay stubs, preferably last two pay stubs, 24, 25 W-2s, last two bank statements. Now, if you currently own a home, and you're looking to trade up, you'll want to take your current mortgage statement with you. But if you're not, it's first time, that you won't have that piece to go with it. You'll take that into some mortgage lender. They'll pull what's called a tri-merge credit report. As we've talked about, that's going to give you all three scores of all three bureaus: Equifax, Experian, TransUnion. And if it's you and a partner, you and a spouse, however it is, they're going to pull your three scores, and they're going to pull your partner's three scores. They're going to use the lower of the two middle scores in order to start looking at things. The mortgage professional then is going to look at credit scores. They're going to look at your income. And along with your credit score comes all of your liabilities that pull through on your credit report. They're going to look at all your other debts that are out there. And they're going to use, and then the other thing that goes with that is they're going to look at your bank statements and figure out what you have for a down payment. Now, down payment can come several different ways. Down payment can come through cash you have in your accounts that belongs to you. The down payment can be gift funds from a family member, someone with a family type relationship, and some of that depends on loan program, how it goes. It can come through down payment assistant programs like the WCDA second loan. And there are also down payment programs that are out there that are grants. Sometimes, like for example, My Front Door, which is in the Civic Center, they will do a $25,000 forgivable grant on over 7 years. So you get in the house, you qualify for the program, go through the program, they'll give you $25,000, and it's like I said, it's excused every year over 7 years, and then when you've been in the house for 7 years, it goes away completely, and all that equity is yours. So we take a look at that down payment portion of it, and then from there start figuring out debt to income ratios. Now, what is the credit thing is people ask about home loans is that interest rate. What do interest rates were based on? So your interest rate is based on heavily two things. One is your credit score. The other is the loan to value on your house. Loan to value is a fancy way of saying how much you owe on something versus how much it's worth. So I use $100,000 because it's real easy for me to talk about. But if you owe $90,000 on a $100,000 house, you're at a 90% loan to value. If you owe $80,000 on a $100,000 house, you're at an 80% loan to value. So they take in that down payment along with that to price out kind of an area of what your interest rate would look like. And then from there, start to look at debt to income ratios, and we figure out a range of homes that a person may be able to afford. And those things also will then help us pare down what kind of programs. Do we look at conventional loans? Do we look at FHA loans? Do you look at VA loans? And you start figuring out where someone may or may not fit depending on what they're looking at.
Dan, you've talked a number of times with us here at the Talk Shop. But for those just joining us, tell us a little bit about your background in mortgage and lending.
I'm in the mortgage business going on 20 years. I started December 1st of 2026 and been going strong ever since then. I started at A&B Bank. I got let go there when they shut the mortgage division down into recession. I moved down to Wyoming State Bank, which is now FNBO, First National Bank of Omaha. Then I spent a little time with Colonial National Mortgage and UNIONHOME, and then branched out to my latest venture, which is the UNIONHOME Mortgage. So it's been a fun ride. I've seen every channel there is in the mortgage business, and looked at a lot of interesting situations, and it's been a fun ride.
As you have opened UNIONHOME Mortgage in downtown Laramie, what have you recognized as probably the greatest attribute Laramie has versus other communities in the state of Wyoming? Are there any?
Oh, Laramie's got a lot of interesting things about it, attributes that I think a lot of the other communities don't have. I think one thing is the amount of diversity we have here for the amount of population that we have. One thing about when you start doing what I do is that there's a lot of difference between somebody who's a self-employed borrower, who's a W-2 wage employed borrower. When I say W-2 wages, is that they're a lot of times salaried, or a W-2 waged employee means they're hourly. And how I qualify them is all different, because we have a lot of people self-employed in this town that do a lot of interesting things being self-employed. We have a lot of W-2 wage earners that are salaried, and for example, a lot of the university jobs are salaried positions. Then you have the hourly positions with places, like guys that work at Mountain Cement, hourly shift wages, stuff like that. So that's the thing is, for a community our size, there's a lot of diversity in types of income that you look at. Property, is a big thing I think that is very somewhat unique in Laramie. We have everything in town from, certain aspects you see, and I'll say other towns, what I'll call the main part of Laramie. Then you get out to West Laramie, and you have some of the properties out there that so we're very much a mishmash of things in a lot of different ways, and that's one thing that people I've always amazed people that have looked at my files and stuff like that over time. It's like, my gosh, for a town of 30,000 people, you have a lot of diversity in what you look at. Oh yeah.
Are most properties lendable?
Most properties, to an extent, I would say, are lendable. There are some things out there. The biggest things when you get into properties, especially, when you're looking at borrowers, the home buying process is made up of two things. It's made up of the borrower themselves. What are their specs? What's their income? What's their debt to income ratio? How much can they afford in the payment? The other flip side of that is the collateral that they're wanting to borrow, or the property they're wanting to buy. And you have to look at that property, and you have to look at it from the specifications of, does it fit in the Fannie Mae, Freddie Mac box? And sometimes there are properties around here that is a challenge, because not every property is, and what someone does with it is intended to be in the box. And so you have to look at it and figure out, where's the fit for it. The barndominiums are a great example of that. Now, people always say, well, I want one of those shop houses, or and we call in the business, we'll refer to them as barndominiums. I can put all my toys, and I can put my trucks in there, but then I got my living quarters, and they're awesome. They are, and they're a great idea, but they're a little bit of a challenge when it comes to financing end of things, because typically speaking, they're built for people build them. They're not buying and selling them. And in order to buy and sell them, you have to have comparable sales out there on the market for appraisers to compare them against. And sometimes, comps have been an issue on those in terms of being able to turn them into a regular Fannie Mae, Freddie Mac, saleable mortgage. Because unfortunately, the Fannie Mae, Freddie Mac, Ginnie Mae too, they all have rules, and the property has to fit the rules.
Yeah. Dan Pasman with today's credit tips. UNIONHOME Mortgage, located 208 Grand Avenue in historic downtown Laramie. You can reach Dan at 307-223-88 52. Dan Passman, thanks again for joining us here on the Talk Shop.
Thank you.
Defensa y a los procesos de verdad y justicia.
Por su parte, la defensora por